Hi and welcome to On the Record, your playbook for tapping India. Today we will look at an important topic called due diligence. So we will evaluate how do you go about keeping yourself ready for your next fundraise so that your due diligence can be faster. So we'll try to understand what due diligence includes, what are the areas that it covers, and what are the things that you should be aware and keep it ready so that whenever a due diligence starts, you can actually be prepared with all the data and help close it faster and then get the money faster into the bank. So first and foremost, you should prepare a due diligence checklist, which will help you to make sure that every aspect of due diligence is covered and all the related documents and data can be arranged accordingly. Then you should look at a document management system where you can continue to store the data. Along with it is good if it has a version control or a tracking mechanism so that any new data, so you cannot be doing this from scratch every time. So once you have a proper identified structure, then you can store all the data at one place and keep adding the incremental data as and when it happens. So these are the two basic steps to get started. Now let's look at the various areas. We have divided it into few broad areas and then we will talk about each of them. So the first one is around financial due diligence. Financial due diligence typically covers your things like books of account, your various statutory compliances and your cash flows and budgeting. So you should make sure that your books of accounts are properly met. They have been audited, they are like kind of finalized, it is not in a draft state. So the more prepared you are, the more up to date you are on the books of account, it would help you to save a lot of time. Then comes taxation. So all the applicable taxes and even compliances. So all the taxes, compliances have been done or not. All the taxes has been paid, so all the tax paid challan or forms of filing of taxes, you should keep it ready. On the compliance side, whatever other compliances are applicable to your organization, all the returns, all the forms, all the data and records around it should be kept ready and you can keep adding it. So month on month as you do the compliances, once the structure is there, you can keep adding the incremental data as well into the same structure. Then comes your current financial position of the company, which includes your cash flows, projections, your debt structure, your cap table, all these things should be part of it. So for example, if you have taken any debt, so how much is the debt to equity ratio or other financial metrics like how is your cash flows looks like, is it justifiable or not? How is your budgeting or allocation to various departments, how much runway you have? All this info and data, if it is presented in a nice format, then it would help you to sail the due diligence faster. Now let's look at some of the legal due diligence aspects. So what are the things that it covers? So broadly in legal due diligence, it covers all the contracts and agreements. So whether it is a contract with investors, it is contract or agreement with employees, any advisors, any mentors, even the founders, the customers, all the customer agreement. So the idea behind the due diligence of agreement is to identify what you have committed, what you have entered into, and is any of the clauses that you have entered into could bring in any potential dispute, any potential claim, any potential liabilities in the future, and if it brings, what are the ways to mitigate it. So that's why contractual due diligence is really long. And they all the due diligence team will go through it in complete detail. So make sure you follow some of the best practices and in the current one also, if you find any gaps, it is good if you can continue to address those gaps either through way of supplemental agreement with the same people so that any gaps that can be covered and you spend and you don't spend time when this is highlighted during the due diligence. If something gets highlighted and you start acting on it, then it could take much more longer time to draft those documents and then get them executed. Many times it is not even feasible. So at least you know where you stand, and in case if something gets highlighted, you can also say that these are no more doable and whatever it is, we have to move on with it and see how does it impacts your due diligence process. Third thing is all the corporate documents. So this includes your charter documents like your company bylaws document or shareholding pattern, all the share certificates has been issued or not, any other registrations, licenses that you have taken. So a record of all of that, any other approvals that is needed to run your business. So all these documents form part of the corporate documents. So you should identify them, keep a list, and then keep all the documents stored in the appropriate location. Then comes IP registrations and records. So anything if you have done or if you have filed for a patent or any other IP, is there a proper application made? All the IPs are under the company's control. Many times things, small things like say the domain of the company, whatever is your domain name, was initially registered by founder and it has still not been transferred to the company. So this kind of things also starts playing a role as you get into serious due diligence. So if required, you may have to assign that right or even transfer the domain to the company. Same thing goes with your other intellectual property, whatever IP you are creating. Either you would have registered it, or if you have not registered, you would have made sure that it is safe. So whatever steps needs to be done to make it safe and secured and owned by the company, not just by the founders, is important. So you should make sure that these are there. If not there, then please take steps to make it happen so that during due diligence you don't lose time. Now let's look at some of the business and operations related due diligence. Here generally the due diligence covers what does your market look like, who are your competitors, how does your customers look like, how would you reach out to them. So that covers the business. So basically your business roadmap, how you plan to tap your customer base, what is your GTM strategy. All these things are up for due diligence in business and operations side. It also includes things like revenue recognition policy. For example, you may be charging annually upfront and recording it as this month's revenue. So whether it should be bifurcated to the next 12 months or not, this is especially applicable for SaaS companies and stuff. Or it could be like you have a deferred revenue recognition on completion of the project. So is that a big liability that is already sitting on your balance sheet? A lot of work has been executed and payments have not come. So this kind of things would be up for due diligence as well. The team could also look at your unit metrics if it is applicable in your case. How is your cost of customer acquisition, what is your cost of execution, and how much profit you make per unit that you sell. So again, it depends on industry to industry. So based on your industry, it could be or it may not be, but if it is applicable, you should keep the data around it also accessible and ready. On the operation side, they would look at nowadays there is something called ESH, environment, safety and health. So what is your workplace culture? How is it impacting the environment? How is the health of your employees or workers? So these aspects and impact around it, and you would also have certain policies devised around this. So they would also review the policies and see if you are implementing them as per the specified standards or not. Then comes your other internal policies and practices. So everything around like stock options, or any other policies, your leave policy, your holiday policy, work from home policy, or any other policies and practices that you have implemented in the incentive structures or any other policy, whatever you have implemented, all these documents would be up for review. And then it would also see and impact what are the impact on the business as you grow, and how these policies, in case if anything needs to be changed, either you can take a decision if you know, or during the due diligence team recommendation, you should be ready to make changes to this. Another important policy that I wanted to highlight is anti-bribery and foreign corrupt practices. Now this is gaining a lot of significance, especially with serious investors. They want to see you have stricter policies, you also educate the employees and ensure that these policies are well in place, not just on paper, well implemented, because this also relates to your corporate governance, quality and standards. In the interest of time, we are breaking this video into a series of two. so that all the aspects are well covered and you get an end-to-end understanding of what goes into due diligence and helps you to prepare it well. So please do not forget to watch our part 2 of due diligence series. Thank you, and that's it for today. Take care.